Bitcoin holds at $63,000, while Iran talks stall and Israel threatens strikes. That resilience is the only thing keeping risk assets alive until Tuesday's inflation print. Heading into the new week, Sunday, July 12, 2026. Like and subscribe for daily market updates. Today's agenda: top story, market snapshot, macro and central banks, geopolitical status, commodities, crypto pulse, earnings/IPO and deals spotlight, closing summary. Up next, market snapshot. It's Sunday, July 12th, and the two stories this audience cares about most are colliding. Over the weekend, crypto's resilience met its first real test. Bitcoin eased back to just under $64,000 as U.S. Iran talks in Oman stalled, and Israel signaled it's ready to strike Iran again. And yet, look closer, Bitcoin barely flinched, still holding onto a winning week even with a war simmering, and the Federal Reserve turning in favor of higher rates. Crypto is the only major market open right now, and it's holding the line. The real question lands in 48 hours. Can that resilience survive Tuesday's U.S. inflation report? That brings us to macro and central banks. Crypto is the one major market trading this weekend, so start there. Bitcoin eased modestly to around $63,700, giving back a little of Saturday's push above $64,000, yet it's still up roughly 2 to 3% on the week. Ethereum sits near $1770. That's a controlled dip, not a flush. As for the stock market, you'll return to Monday. Friday's closing bell left the S&P 500 at 7,575, up better than 1% on the week for a fourth straight winning week. The Nasdaq closed near 26,282, also green. And the Dow lagged at 52,637, down about 0.5% across the 5 days. The week's driver was the artificial intelligence trade, with Nvidia up about 4% Friday, Meta up roughly 6%, and chip giant SK Hynix landing a record Nasdaq debut. Unpredictable price swings stayed calm, the VIX under 16 far from panic. The bottom line, even with a live war and in favor of higher rates Fed, risk appetite held, and Bitcoin has been riding the same wave, absorbing global political blows that would have sunk it in past cycles. Here is how global politics are pricing into oil and gold. The reason crypto's grip on 63,000 is impressive is the macro tape working against it. Under new chair Kevin Warsh, the Federal Reserve held its key rate at 3.5 to 3.75% in June, scrapped this year's expected cut, and the minutes showed a few officials pushing for an outright hike. Futures now price the odds of a September rate increase near 60%, a stunning flip for a market that opened 2026 betting on cuts. The fuel is inflation, freshly stoked by oil, with May's reading already above 4%, the hottest in years. That makes Tuesday's June inflation report, the inflation data, the single most important event of the week, and it matters as much for Bitcoin as for stocks, because crypto lives and dies on the dollar and on yields. A soft number weakens the dollar and lets risk assets run, a hot one. Opposite, on growth, cracks are showing, with existing home sales unexpectedly falling in June to about 4.1 million units as steep mortgage rates bit. The verdict: inflation risk is re-accelerating, while growth frays at the edges, and every risk asset, crypto very much included, is hostage to what prints Tuesday morning. Oil prices are reacting to this tension right now. The war is the weekend's other headline, and it hardened rather than healed. The U.S.-Iran ceasefire, a 60-day framework signed in June, is effectively dead. After Iran struck 3 commercial ships in the Strait of Hormuz, the channel that carries about a fifth of the world's oil, the U.S. hit more than 80 Iranian targets over 2 nights, revoked its waiver on Iranian oil sales, and piled on fresh sanctions, and Iran fired back at U.S.-linked bases in Kuwait, Bahrain, and Jordan. This weekend brought talks but no breakthrough. Iran's foreign minister met Oman's in Muscat on Saturday to hammer out how to keep Hormuz open, but the two sides stayed far apart, snagged on Iran's demand for tolls and a new authority over the strait, which Oman and Washington both reject. Meanwhile, Israel signaled it's ready to strike Iran again, and a U.S. advocacy group laid out how Tehran has breached the June memorandum. The backdrop stays grim. Roughly 6,000 seafarers are still stranded around the Gulf. Strait traffic is a trickle of 15 to 20-odd ships a day against well over 100 normally, and the maritime threat level is rated severe. For crypto, this cuts both ways. The war stokes the inflation that pressures Bitcoin, yet round after round of strikes has failed to break crypto's bid, which is exactly the durability bulls keep pointing to. Base case, uneasy stalemate, low probability but high impact risk, a full Hormuz shutdown. Treat any fresh weekend headline as fast moving, and until confirmed, unconfirmed. Bitcoin is holding its own against all this noise. Oil is the war's clearest price signal, and this weekend it cooled rather than spiked. Global Brent crude eased towards $76 and U.S. crude towards $72, well off the near $80 highs midweek, as traders leaned on the fact that both sides are at least talking, even if those talks stalled. The floor under prices is the risk premium on the Strait of Hormuz, sharpened by Washington pulling its waiver on Iranian oil exports. Capping the upside is demand. The International Energy Agency now expects global oil consumption to fall this year, the first annual drop since 2020, partly because the Hormuz disruption has dented Gulf exports. Gold, the classic haven, hovered in the low 4,000s after a volatile week, and China's central bank added the most gold to its reserves in over 2 years last month. Silver held near $59. The read, commodities are pricing this conflict through the oil barrel, which keeps the whole story tied to inflation and rates, the very forces Bitcoin is wrestling with into Tuesday. Corporate earnings also drove some of this week's moves. This weekend marks the only major market focus as Bitcoin hovers near $63,700. Despite a week defined by an oil shock, bond sell-off, stalled Iran talks and fresh Israeli threats, crypto has dipped rather than crashed, proving its status as a durable risk asset. The chart confirms this resilience. After clawing back from a monthly low of roughly $57,700 to above $63,000, Bitcoin flipped resistance into support. Bulls now target the next level at $67,400, which could open a run toward $70,000, while holding above approximately $59,000 remains critical on the downside. Ethereum trades near $1,770, Solana around $78, and XRP just over $1.1. Bitcoin dominance holds steady at 56%, indicating capital stays in its safest name. Investor mood has shifted from extreme fear last month to a fear and greed index reading of roughly 30, while June saw the worst U.S. spot Bitcoin ETF outflows on record. An earlier 10-day streak snapped before funds shed slightly again Thursday. Recovery is real but fragile. Skepticism persists. Citigroup cut its 12-month target to $82,000 and forecasts zero net inflows for the year. Bulls eye regulatory clarity via a fresh draft of the Clarity Act, slated to move this month, while heavy holders like Strategy continue selling into strength. Ultimately, crypto routes back to macro conditions, with Tuesday's inflation print serving as the decisive switch. Everything hinges on one number coming out tomorrow. Two corporate stories carried the week and set up the next. The headliner was South Korean memory chip giant SK Hynix, a key NVIDIA supplier, which made its U.S. debut and raised $26.5 billion, the largest ever American listing by a foreign company, its shares popping roughly 13%. It's now a live gauge of the AI memory boom that has powered this whole rally. Earnings season also opened strong. Delta Airlines posted record June quarter revenue near $18 billion, and raised its dividend 15% on surprisingly strong World Cup travel demand. The real tests come this week. Big banks led by JP Morgan report Tuesday, right alongside the inflation data, and chip bellwethers ASML and Taiwan Semiconductor follow, giving the market its read on both the consumer and the AI supercycle. Finally, let's turn to closing summary. Heading into the new week, the through line is a market, and a crypto market, betting the AI boom and Bitcoin's resilience can outlast a live war, and in favor of higher rates Fed. The single biggest risk is Tuesday's inflation report running hot, which would harden rate hike bets and pressure everything from stocks to Bitcoin. The single biggest opportunity is the mirror image, a cool inflation data that softens the dollar, eases yields, and clears Bitcoin's path toward that $67,000 ceiling. Between now and then, watch two things beyond the data: whether the stalled U.S. Iran talks reignite the oil premium, and whether Israel follows through on its threats. The week hinges on one inflation print and one fragile negotiation. If you want the crypto and macro map before the opening bell, subscribe, and we'll be back Monday. Heading into the new week, the through line is a market betting that AI boom and Bitcoin resilience can outlast live war, and in favor of higher rates Fed policy under Chair Warsh. The single biggest threat remains Tuesday's inflation data printing hot, which would force higher rates and crush risk appetite across all sectors, including crypto. Thanks for watching Market Pulse Daily.